Hi, I'm John Persinos, Editor-in-Chief of Aircraft Value News. I'm also a contributing editor at Avionics International Report. With me today for an interview is a very special guest, Dr. David Yu. Dr. Yu is a CFA Charterholder with a BA MS from Johns Hopkins University, an MBA from New York University's Stern School, and a PhD from the University of Nottingham. He is a professor of practice and finance at NYU, a fellow of the Royal Aeronautical Society, and a fellow of Johns Hopkins Applied Economics and Global Health Institute. Professor Yu also is chairman of the Asia Aviation Valuation Advisors Group. He also is a member and senior appraiser with the International Society of Transport Aircraft Trading, ISTAT. So, is Dr. Yu qualified to answer my questions today on the global aviation market? You bet he is. Dr. Yu, thank you for taking time out from your busy life to join me today for this interview.
Thanks for having me.
So let's get right to it. The global recession. A global recession is looming. The global stock markets are in the tank. This obviously affects a whole raft of sectors, including global aviation. U.S. gross domestic product contracted 0.3% in the first quarter of 2025, the first negative reading since 2022, according to a report released April 30 by the Commerce Department. At the same time, major airlines have been releasing grim predictions for air traffic demand. The fact is, Trump's tariffs and economic policies are weighing on business, consumer, and investor sentiment. How will these adverse dynamics affect aircraft values and lease rates in 2025 and beyond?
Well, I think you got to break this question down to different parts, right? First off, you got to look at demand, aviation demand. And the aviation, let's talk about just the airline demand first. Right. I think if you think about it, we have been in a absolute dismal lows during COVID, and now we are in very, very high demand thereafter, right? Post-COVID highs, revenge travel, and things like that. And we have been at that. Very high pricing, very high load factors. And today, we are starting to feel the pullback of that increased demand. So we're not in a great run room, and given all of this economic uncertainties, these geopolitical aspects that are making us have pronounced kind of reflections, just globally speaking, and that's kind of where we are. And there's a big difference between right now the full service carriers. The big three are still doing fantastically well, but you could see in the low cost segment, carrier segments, the LCCs, it's starting to pull back, both in the U.S. as well as in Europe and elsewhere. You know, and if you look at kind of supply on that flip side, remember we're talking about airline supply, seat supply. There's not much new aircraft unless the airlines have ordered long ago, right? And that's kind of that's a good leadway into what's happening on the aircraft leasing supply front, right? So as I just said, the supply side, just not much. Like unless people have ordered a new aircraft and deliver them, there's not much there. People are doing sale and leasebacks, right, with airlines to finance them. That's great. At very high pricing all around across the board. And even on the engine side, you know, you need engines, you need parts. Sure. Engines are very, very few and very, very hot in demand. And that's creating basically reverberations throughout the industry. And not only that, but the MROs are very, very hot, right? It's hard to get a slot, maybe 6 months out, 1 year out. And even if you can get a slot, what about parts? Sometimes that's an additional 6 months to a year. So there's very long lead times. And this has grown from, you can see there's issues with the Pratt & Whitney engines, among other manufacturers. And this has created a lot of aircraft who want to fly, but can't fly because they can't get these parts and retrofit needed. So broadly speaking, you know, with all this in plan, we're still in a very heightened value sense, aircraft value sense, and and accordingly, lease rates are much higher than in those. So we're still in a very frothy state from an aircraft leasing pricing perspective.
That leads me to the next question. You know, paradoxically, the aircraft leasing market, despite these economic headwinds, the leasing market is growing, and it's projected to grow on a multi-year level. Take a look at this chart here. This chart projects the global aircraft leasing market's growth into the year 2029. As demand softens, leasing becomes a lifeline. It allows airlines to remain flexible, avoid heavy upfront costs, and adapt quickly to shifting travel patterns. For carriers loaded with debt, like many are, this model also supports deleveraging goals. Explain this economic contradiction to us that the leasing market is growing amid an increasingly bleak global economy.
No, I think ultimately you got to look at it from an airline's perspective. They can either buy aircraft with cash, of course, but of course, usually with debt that's associated on their balance sheet. The other options are having a finance lease and an operating lease, right? That they can and they can get from outside financiers. With the operating lease in particular, which is most predominantly what most airlines want, this is considered off-balance sheet financing, right? So the debt that's associated with that purchase is not on the airline's books, but rather it is on the lessor's books.
Right.
So from airline's perspective, it looks like less debt. But given the new accounting standards, this form of treatment, off-balance sheet treatment, is really being forced to be put on. The adjustments are being forced on. Historically, analysts have all done this adjustments themselves manually, but now it's more conformity in that sense. But at the end of the day, how are people going to finance? Financing, if you think about it, is a sales and lease back direct ones. As I said earlier, there is direct placement of leased aircraft that the lessors have ordered and now given to the airlines. And if they can't find these alternatives, maybe it's the capital markets from syndicated debt and other methods. So there is a variety of instruments out there. The interest rates are much higher compared to during the COVID period and previously. And that has added a lot of pressure to the airlines to be able to make up enough to support that debt.
Yeah, and at the next Federal Reserve meeting, the U.S. Central Bank, it's anticipated that the Fed will stand pat on rates. So we're not going to see rates come down anytime soon with renewed fears of inflation largely due to the tit-for-tat tariffs. Let's shift to the topic of COMAC, the Commercial Aircraft Corporation of China. The duopoly of Boeing and Airbus have dominated global aviation for decades. Now COMAC has come along, China's state-run aircraft manufacturer, and it wasn't given much of a chance of dislodging Boeing and Airbus until the trade war. Do you see the fracturing of the Western alliance and all these onerous tariffs? Do you see this providing an opening for COMAC? Does it have a better chance now of stealing market share?
It's a great question, and I know a lot of people are looking at it. Ultimately, I go, innovation is positive, globally speaking,
right?
Because we can move forward as a global population. We can get cooler technologies and better efficiencies, et cetera. And developing an aircraft, narrow body, wide body. I know the COMAC has its C919 product, ARJ21, which is now the C909 product, and then going forward, the wide bodies. This is tens of billions of dollars at a minimum in terms of R&D spend. So lots of money. So is this currently speaking? It really only has certification for operations by the CAAC, the China aviation authorities, and basically FAA as well as EASA, the European and US regulators, have not yet approved them under their respective regimes, and that has a hindrance, right, of the acceptability of the aircraft globally, because those are the two gold standards currently speaking. In most respective countries, aviation authorities will mimic the FAA and EASA's regulations and regulations thereafter. So that's one issue. And another issue is just, it's a brand new aircraft. It takes a lot of time to gain acceptability into the marketplace, right? There's only been a few that has been produced. The ramp up rate in production, it's actually quite slow. So there's not that many out there flying in the market. So we're really seeing the real operation statistics currently and continue to gather momentum, rather than just on the books and planned and optimized design, et cetera. But ultimately, the second part is this tariff regime. What's going to happen? aviation is a global industry.
Right.
It is I know we talk about Airbus and Boeing as the big two duopoly players, but they're not 100% US and they're 100% European, right? It is a global supply chain. And same goes with Comac. It is a global product. You have Honeywell APUs, we have GE engines, et cetera, et cetera. So, so this is going to be an issue given these uncertainties with the tariffs that's going to happen, and how the administration will continue to view this going forward. So, notwithstanding that part, the uncertainties from tariffs, let's just talk about commercial aspects. This will take time to erode Boeing, Airbus. Given what's happening with Boeing as a big star of the U.S. Basically U.S. output and sales abroad. They have been a target on their backs, right? And given their basically the regulations and incidents and accidents, tragic incidents, I would add, the MAX, etc. This has created an opening for Comac, a big opening, because people now have some uncertainty in the mind, which never existed before. But unfortunately, they don't have enough production to get it up to speed to take full advantage of this, and the regulation aspect, the certification aspect will also play a hindrance. So these are all things that they need to do before they can become a bigger player and a more impactful player in the global markets, and that's what they want to do. So one piece at a time. So I look at this as it's not today we're worried about, but of breaking up this duopoly potential breakup, but rather it's really about 10 years or so. That's what we're going to start seeing, because of all these things take time to adjust. Yes. So I think there's a lot of potential. Like I said, I've actually flown on it. Oh, really? Yeah. So I've flown on it in China. So I've experienced it. I've also flown on the C909 as well, which is the old ARJ21. So you can see it in action. And I think this is going to be a timeline approach. So it's slow and steady in getting the right products and right certifications out. Right.
And the Chinese, of course, they're renowned for playing the long game. And the European regulators, aviation regulators, recently stated that the C919, now the 909, is likely to be approved in 3 to 5 years, which isn't a long time when you consider China's strategic long-term view. But you touched upon a very important point. In a trade war, nobody wins, and Comac is dependent on Western parts and technology and expertise. So these tariffs will hurt everybody, not just Boeing and Airbus, but Comac and Bombardier and Pratt and Whitney and all of the players. Let's shift to aircraft models. Which aircraft models do you see as particularly hot right now, really popular, in demand, and why?
Well, the hottest models are really narrow body, A320neo family, right? That's a big one.
Yep.
The MAX, this Boeing 737 MAX family was very popular, but given the uncertainties, it's taken a hit. But at the same time, there's no alternatives to these families of narrow-body aircraft. So they are also coming back in terms of demand. So that's and why is that? But basically, airlines around the world, this is the bread and butter of their fleets, both in terms of LCC, low-cost carriers, as well as full-service carriers. And mainline wide bodies are also very, very popular, right? A350 family, as well as 787 family, Boeing 787 family. Why? Well, we have really kind of taken out of phasing out of the A380s. We have starting to phase out the A330 CEOs aircraft. So you're really kind of narrowing kind of the scope here. That said, if airlines can get 330s, they'll want to take it because they want that additional lift, but very, very hard to get. There's not much liquidity. Whatever airlines are taking, they're just renewing, keeping up. So it's very hard to get additional aircraft.
Well, related to that, with aircraft inventory tightening and with lease rates climbing, are we on the verge of an aircraft valuation lease rate bubble? And if so, what would pop it? High interest rates, rising fuel prices, OEM ramp-ups? What's your opinion?
I would say we are definitely in frothy times in terms of aircraft valuation
Yes.
and as well as engine valuation, right? Because of all the circumstances and factors we just talked about. Most of which we talked about, but there's of course others. But ultimately, this is building up, and there's no immediate offering, unfortunately, to this, right? Yes, OEMs want to ramp up supply the delivery rates, and they have projections to do so, both the manufacturers, but they have to follow their own supply chains, and that's difficult to achieve. But I think, look, interest rates, not my opinion, they're not going to go. It's not going to change very much. It's not going to drop significantly in a very quick time. No, we're pretty in a holding pattern,
Right.
and maybe some small adjustment lowering by the Fed going forward. Fuel prices, we're actually right now it's actually quite low. Fuel prices is actually quite low on a
Prices are
relative.
coming down. Yeah.
Yeah, exactly. OPEC are pumping a lot more supply, and fuel prices are going down. That's helping. That's a large exogenous factor for the airlines as well as the leasing industry. That's a good thing. So that's actually helping. But ultimately, I think what will come down is the biggest question mark is that demand for travel. How fast is that going to hold steady or decline or whatnot? That is the ultimate driver. And if it goes, because if you think about the aviation airline industry, it's highly levered, highly levered. And a lot of the factors that drive its profitability are very exogenous. They don't have control. The airlines don't have direct controls over those factors. That being, I was saying, fuel pricing, as well as the people aspect, the pilots, the crew, et cetera, and the financing costs outside of their control. So they can do the best they can, but if they're highly levered, one small reverberations might have profound effects. And you're seeing, and I predict much more M&A action that's going on,
Yes.
mergers and acquisitions, and especially in the U.S. side, but you're seeing much more impact in the European sector. So I predict both sides, there'll be many more mergers and acquisitions come to get their overall costs down on a collective sense.
Right, and part of the catalyst, a major catalyst for the merger and acquisition pickup, especially in Europe, are the costs of tariffs. This has been a very informative, fascinating interview. Thank you for letting us tap your extensive expertise, Dr. Yu. Have a great day.
Thank you so much for having me. I enjoyed this conversation very much, and best for you and your viewers.
Well, that's it for now. Thanks so much for watching. And if you have any comments or questions, please don't hesitate to send an email to me at jpersinos@accessintel.com.